Some prominent reasons AU Small Finance Bank, a leader in the segment, catches the imagination of market observers. A small finance bank, relatively new but with a significant presence in the industry. A bank that stands out among its peers with a sizable market capitalization, also enjoys a distinctive price earning multiple which is far above the sectoral PE. It is the giant among the small finance banks. A small finance bank has a statutory obligation on the priority sector funding. RBI's prudential norms are attracted by the bank as a scheduled bank. A quarter of its branches required to be in specified rural areas. A loan-wise ceiling in amount applicable on a half of its portfolio. On 1st April 2024, carries out first ever merger of small finance banks in India, absorbs Fincare Small Finance Bank, which is a fifth of its net worth in size, which enables it to grow beyond the core geography into southern part of India to be a pan-India player. The merged entity is endowed with a deposit base of closer to 1 lakh crore, a credit deposit ratio exceeding 88%, and a balance sheet size with assets in excess of rupees 1,26,000 crores. A small finance bank but operations quite voluminous. A pan-India operator effectively using its operating leverage to generate exceptional surplus on a consistent basis. Operations during the 2 quarters post-merger highlight significance of 2 segments, unsecured loans and commercial advances, which are mainly catering to the micro, small and medium enterprises from the unorganized sector, which has enabled the company to post an year-on-year growth of over 40% during the first 2 quarters of FY25. A picture of contrasting results pre-merger and post-merger. In the 4 quarters of FY24, the net interest income as a percentage of interest income and also the growth in net interest income has been on the decline due to rising cost of funds, but the welcome change is quite evident in the 2 post-merger quarters of FY25, where an year-on-year growth in excess of 50% has come to the rescue. Change in loan mix worked wonders for the company. Deposits were rising quarter after quarter, but the cost of funds were rising and they stagnated in the last 3 quarters. It was the yield which was falling quarter after quarter in FY24, as a result of which margin, which was 6.6%, under pressure moved down to 6.2 by the end of 4th quarter, but the fortunes changed in the post-merger regime when there was a substantial improvement in the yield on advances by almost 120 basis points, taking up the margin to a level of 7.4%. It is the contribution of higher yield from microfinance and unsecured loans that changed the composition of margins of the company. Surprisingly, the market did not recognize the exceptional profits reported during the latest 2 post-merger quarters, as is evident from the fall in market price during the recent months. It has taken the price earning multiple to a level which is the lowest in the recent months, and that is where a study of AU Small Finance Bank makes a worthwhile exercise. Encouraged by its successful merger, the company has applied to RBI for its elevation to universal bank, which helps operate as a commercial and investment bank. The bank exceeds the eligibility requirements in terms of net worth, listing and 5 years satisfactory track record. once approved by RBI, is likely to get benefit of higher customer trust and credibility, boosting its business potential to the next level. Shareholding pattern of the bank is quite unique for the holding of mutual funds and FPIs, a very substantial holding of almost 2.5 times that of promoters, which is an index of trust of the investors in the company and its business prospects. Companies' disappointing CASA deposits growth and the risk associated with the business of small finance banks in general and a few of its business segments like microfinance and unsecured loans in particular are apparent matters of serious concern. The bank's CASA deposits have been growing but not commensurate with the phenomenal business growth, particularly in the recent quarters. As a result, CASA as a percentage of total deposits is on a falling trajectory for over 6 quarters in a row, compelling the bank to have excessive reliance on costly time deposits, affecting the bank with higher cost of funds, bringing down its profitability severely. Microfinance and unsecured loans prior to merger were a mere 3,000 crores at 4% of portfolio, and the same has ballooned post-merger to an amount of 11,000 plus crores at 12% of the overall portfolio. This increases the probability for higher stress in the loan account going forward. Over last 6 quarters, the company has a greater worry on hand in the form of sequential growth in gross NPA and also net NPA, and this is further reflected in constant fall in the provision coverage ratio, falling from 75% to 63%. It is a pointer on bad quality getting into the loan portfolio. Prices have been rebounding from lower levels multiple times over last 3 years, currently being at the rebound point is a positive for a possible upward movement in the near future. The share price is inching up, attempting to move out of the dormant zone. Accordingly, any movement beyond 616, the threshold, could be hinting at a strong positive for the stock to move up. It's worth noting that the share price, being at a level below all averages, needs a reasonably long period to develop a positive momentum. The quantity movement as per price action data below 100 days average suggests only marginal support to the price move. Hence, the recent price fall does not suggest any further fall, nor does it indicate any firm signs of reversal. Geographical spread and a network of national reach, rising volumes strengthens operational efficiency. Upgradation into universal bank likely to enhance brand value and business growth. Change in the loan mix with higher share of microfinance and unsecured loans to be watched out for financial burden. Risk from higher price earning multiple versus peers and the vulnerability to economic downturn deserve a close watch. Hope you found this presentation to your liking. I am Vittal Prabhu with the fortnightly video on Stock Learning Simplified. You can access videos of similar kind at our info card on Stock Learning Simplified. We look forward to your positive feedback with comments. If you are new to the channel, may please subscribe and press the bell icon for timely intimation on our forthcoming videos. For your valuable time and kind support, highly obliged. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.